Kunal here, Bulls on CryptoStreet. Want to go over a setup that I think is really important for all new traders, but especially people that are getting into cryptos. You know, there's always two sides to a trade. One is your investment side, and then of course, where you're having longer term picks, and then one is your income trades, right? Your day trading or short term trading trades. And one of the things I really want to talk about is picking the right vehicles to trade versus just sitting in dead money, right? And so one of the things that's been happening over the course of this last few months while this Bitcoin fork has been going is you're seeing kind of just like really dead money in a lot of the cryptos. And a lot of times if you try to trade these, what's going to happen is because its daily charts are not really moving, you don't get really any wind at your back, and so they just kind of all sit around. So you're seeing like just range in a lot of these. But the one that has been moving, it has been the Bitcoin. And so, I've made a cognizant effort to really stick when I'm day trading to things that are trending. So I want to talk a little bit about a setup that we did. And so, after this breakout here over 5,000, you can see this thing kind of just rested into this $6,000 range for a couple weeks. And when you see that, that's actually a really bullish sign. It's essentially just consolidating and building up steam. Remember that things get their power from consolidations, from bases, especially in trending environments. Those short-term pauses are areas where fresh buyers can emerge and push back up, the instrument. And so I kind of had this level over here, kind of this like 6,200 ish level that would maybe start this breakout again. And so after it's been consolidating for a while, we saw this kind of push into 64.40 right here. You see this? And when this happens, I don't want to just chase this thing right away because my risk would be from where I have to put my stop loss would be really, really epic. And so, this is a good trade too because I had to show a little bit of patience in this. So I entered this trade right in this area. If we're talking in the crypto chat, so I think we entered this right. So move stop to 6150. So we entered this right in the beginning of November, end of October. But I got this thing right in here, and then my original stop loss is just under 6,000. So I'm gonna risk like $150. I got 6148. I'm gonna risk about $150, right? Put my stop under 66,000. That gives me the support right here, and it kind of gives me that nice round number. And you can see what kind of happened. After I got in it went up a couple shekels, and then came right back down, but it didn't stop me out. And that becomes really, really important because when we're trading, sometimes if we're looking at a short-term trade, that's like going to be a few minutes, then, you have to follow and explode right out of that pattern right at the moment. But on something that you're going to plan on holding for a few days, the daily chart is the most important chart, and you're using your intraday's more as guidance, as risk management, and just timing tools. And so, I stayed in this thing because, well, I'm only risking $150. Even if you buy 2 Bitcoins or something, that's a $200, $300 risk, which is totally acceptable for something that can move up $1,000 in a few days. So we come back down and we start to really shape up, and that gives me the, now you start to see the real pattern start to emerge. You see this? Where the pattern starts to really tighten up. And that's something that's going to tell you that explosion is coming, right? When that pattern starts to tighten up, explosion is coming. And so once this thing starts to go, now this is also, you can double up here or even double up here if you want to. For me, I was looking at some other stuff, and so I did not double up here. That would have been the prudent choice. As traders, it's our responsibility to always be adding risk when we see proper reward to risk ratios, and also just inflection points where you may get some real good runs. So you start to see like this nice push. So into this, I sell off half into this spike over here to the 6,400, and then you're starting to see, right, another consolidation, and now we're off to the races. I sold my the rest of mine into this half over 1/4 into here, and I made a little bit of mistake here. Was that I could have held for a little bit longer of a time. I missed out on another run. This kind of happened right into the morning or early morning, so I did miss out on this kind of selling off selling off my shares a little bit too early on that, because you can see here, I do this sometimes, and it's there's no point of selling out a quarter at 6,838 and then another one at 6,858, right? And so that's right next to each other, right? The whole point of scaling out is to sell 1/4 into the spike and then sell 1/4 into the next spike, so you have some for the home run. So that was a slight adjustment that I definitely need to make is make sure that I have a really, really good understanding of where it could go. And I had in my mind that this thing was probably could break over 7. But one of the things to really do is kind of keep an eye on your EMAs, and especially on the daily. And you can kind of ride up that 9 EMA for a little bit of time until you start to get that parabolic, because I left about another 1,000 points on the table. So even though I caught a nice rip on the day trade from 6,100 to 68, a good chunk of it, I left some on the table where I could have maybe gotten at least a few hundred more points. Now, the good thing is, so once this thing started to move, I immediately turned my attention to BCC. BCC is something that we've been talking about in our chat room for quite some time, because we were having a webinar. We do the Cryptos and Cocktails webinars, and we do webinars for our students in there. One of the things I really liked was this kind of tightening pattern here, where you were really building some strong support here at 300, and then you had a surefire trend line coming. So, my thinking was, if you kind of break over the trend line, but really it's got to get over this MAs at around 400, you could get yourself a really nice move to maybe 700, which is just could be monster. So, as this thing started to make its move, we're watching this thing really, really closely. And I missed this initial one because I was in a couple other plays. But I'm just stalking it. I didn't see the proper entry that I wanted. The patterns were just too loose, and that's totally fine. But once this thing consolidated for a couple days and it started to make its secondary move, you could see that, we had ourselves a surefire kind of flag pattern over here that is something that's just really, really powerful. When you get this kind of spike in here, right, and you're just consolidating into this range, and see how your EMAs are coming right up under this thing. We entered this thing right at 488, and it was game on. Into this big thrust into the 540s. I sold off a partial. It came back to support, and then it was just off to the races into this next spike. I sold into this, and dude, we ended up with a really, really kind of nice shred. So I got off 577, 563. Some really, really, that's almost 100 points on this thing. So I got 488. It's almost 100 points in about one day, which is, for me, that's what I want. I want explosive moves in the shortest amount of time, right? And so it ended up being a really fun couple days, because one of the things with even something like this, like I bought 20 shares of this at 488. So it's not like you have to go in crazy investment, right? 20 shares, if you can sell some here and sell some here, I mean, you're going to still make over $1,000, which is a really nice gain for a short-term trade with minimal risk, as your stop can really just be under 488 here. So you don't have to risk terribly a crazy amount. It's one of them things, if it works, it works, and if it doesn't, it doesn't. But I had an inkling this would go, because Bitcoin Cash is a similar name as Bitcoin, but it's more a matter of this kind of inflection point that you see here, when you get those ranges tighten like that for a long period of time, what can happen is you get that explosion. Consolidations give explosions. So hopefully that helps, guys. We'd love to have you in the chat room. We got a really good group of guys in here. They're in here talking about, they're here. Look at this. It's a bright morning, right? And they're in here chit-chatting about stocks, and it's pretty fun. Like, they're just a good group of dudes, and I've really been having fun, like, kind of working with them and hanging out, and it's been really entertaining. And besides me, some of these guys are actually really, really good traders, and there's a lot of kind of value that's added in besides just me. So, let me know if you have any questions. You guys can always leave comments or email me or whatever you need. Kunal at Bulls on Wall Street or Kunal00 at Gmail. And I hope to hear from you guys. Take care.